What's good with you guys? This is how I did for this week's trading, the wins, losses, lessons, and adjustments moving forward. Let's head to the trading journal. Okay, so starting off on March 31st. This is the start of, the week, start of the first trading week. So this was actually a red day, and you can clearly see the first trade that we have it's a green day. We're up $47. But the thing about this trade is I was actually up like a good amount. I was floating in unrealized profits. I was up like 160, 155. I was up 155, but I got greedy and I held for a little bit longer than I should have. Didn't take any partials, didn't scale out, didn't let anything run. Simply just doing like everything with the full handle pull. So here's the setup right here. Simply, this was just a retrace into a 5-minute fair value gap, targeting, I believe it was like 4-hour and 1-hour lows. But the thing about this trade is ES also took out these lows, so NQ created a SMT at the lows, causing us to go much higher. And now you see the reason why I ended up trading like a lot more was because I wanted to be right. I wanted to make back those profits that I was originally floating in, but then I ended up trading with emotions, and that's the worst thing that I possibly can do because I've been noticing that it's a bad habit within my trading career, and it's only going to make me just burn through so many funds, so much capital until I actually learn the lesson and graduate from it. So you see right here, we have a $70 loss with 5 contracts, and then we have another $50 loss with 5 contracts, and then we have just another one contract minus 19 right here. And look, I'm mirroring my bias. The thing about these other trades also is you can clearly see that these are all shorts. I take 4 trades and they're all shorts, and only one of them were, profitable. So I gave back $47 plus 92. So technically I gave back, what is that, 130, 39, 159? Something like that. Something around there. I gave back a lot more than I should have, but you live and you learn. This is a tuition. This is, knowledge, data. This is, why and how I'm going to, be better and learn and grow from it. Now for Tuesday, look at this. So ignore the 4 right here that says closed and partial, because those were literally just investment trades. I thought we are going to be dipping and eventually, going higher. I honestly do think we're in like the biggest correction ever, because these markets are fucking correcting like crazy. Trump is doing this on purpose. The tariffs are fucking affecting the entire market. I don't even know shit about the tariffs, but every time that he speaks, it's worse than Powell. So looking over the trades right here, the first trade that we have a short. We have a short on the NASDAQ, QQQ for options. So I took this trade because of a rejection off of a 2-minute, but we're chopping. So it's a 2-minute chop. So it looks clear, but it really isn't. You play it out long term, you look at it, you journal it, you review it, and then you realize, why did I even trade this? I shouldn't have even traded this. So let's look at how I journaled it. So the first thing I always like to do is I ask myself, why did I take this trade? So I took this trade off a rejection on a 2-minute fair value gap, and I wanted us to tap into sell side versus I was observing us to see if we can tap into sell side. Now, another thing that I put on this journal was the price action wasn't clear, no real bias for shorts, because we haven't swept any liquidity. We're literally ranging. We haven't swept any buy side, nor have we swept any sell side. So we're literally in that range, and we're not going anywhere. And then I also like to rate my setups, rate my trades, because this gives me how can I say this? It gives me like a profit factor. I guess you can say that. It gives me a profit factor on if I would ever take this trade again. And it honestly really helps me like a lot, because if I'm in these markets live and I take the trade, I'm like, if I were to journal this, what would I rate it? So I'm already thinking ahead. I'm already thinking long term. I'm already asking myself, what would I rate this trade, win or loss? So this is the start. Actually, this is when I just started doing this, and it's already helping me a lot. So I rate this a 2 out of 10, just because of a very, very, very little confluence for us to go short. This is what the setup looks like right here. You see, we don't really have much, like, we sweep buy side literally on the leg that stops us out, and then it runs in our favor. So that's a key lesson right there. So the key lesson that I learned was trading within a range, haven't swept any buy side nor sell side, and you just traded the consolidation and the retrace. Now, these next couple trades, this is when I start trading emotionally, and this is why I keep saying don't trade with emotions, because it's only going to burn through so much of your funds, so much of your capital. Unnecessary trades that's just going to blow you back and just get you in drawdown that you shouldn't even be in, because you already know how to trade, you know your edge, you're confident in your A plus setups, but when they're not there, you're just pressing that button. So another thing is I married my bias once again. So Monday I married my bias. I took 4 trades, all shorts. This right here, I married my bias once again, and I predicted it. Rather than observe and react, I predicted it. So I entered once again off of that same 2-minute that stopped us out, only to get stopped out once again. Now, the thing with both of these trades is I was in with a decent amount of size. Plus, it's a Tuesday. So the first trade, 124, I'm in with 7 contracts. The second trade, I'm in with 7 contracts again. Now, the thing with options is the amount of contracts you have is like a multiplier. So $49 with 7 contracts, that's literally only 7 cents. There was no breathing room. I have no breathing room. I'm in with too much size. I'm in with heavy position. For why? Because I'm chasing the money. I'm chasing the outcome versus rather than being process orientated. So now this third trade right here, I'm in with 2 contracts going long on Tesla. Now this trade actually ended up running in my favor again, but this is where my lesson learned for this trade was timing the markets. You can clearly see in this setup right here, we're in I believe it's like a descending wedge. It's one of the wedges, but literally it was a retrace into a fair value gap in a downtrend. And the thing about this trade is I needed to wait for a breakout. When you trade wedges, you need to wait for a breakout. You need to wait for clear confirmation, because if you're just predicting and gambling, guessing, you're literally forcing yourself to get stopped out, because there's no clear confluences. There's no clear like proof, and there's literally just, oh my gosh, there's just no confluence to really take that trade during that time, because you need to wait for a breakout. You need to wait for a breakout. Plus, fair value gaps are my entry model, so I always enter on that little pullback. And you can clearly see with that orange box right there, that is where my entry should have been. Now, the other thing is I entered at 546. 546, where I live at, the market opens at 5:30, so that's 60 minutes after market open, and only to get stopped out, what is that, 35 minutes? No, not 35. 31 minutes. 31 minutes, I'm in a trade. Not in a trade, but from 5:30 to 6:01, that's my trading hours. And I got stopped out because I didn't wait for this little entry right here. Now, the one thing that I love about TradeZella is that it literally has your executions. So if I just waited from 5:46 to 6:22, that's literally like 40 more minutes. This is why patience is so important. Patience and timing is so important, especially with the way that I'm trading. I'm trading trend lines and fair value gaps, and then the way that I trade NASDAQ, ES, QQQ, SPY, I trade it with liquidity and fair value gaps as well. Time to time, I'll use trend lines, but it's very, very, very rare, very uncommon. So now the next trade right here, I'm chasing, I'm going long for no reason. Look at this. You can clearly see, not only do we have an AMD model and I'm trading this manipulation leg, but look, I rushed the fuck out of this trade. It's a 0 out of 10 because I rushed it. I literally saw all of the drawdown that I was in. I was like, yo, I need to make this back right now. Trading with emotions is going to fuck you up like insane. You're going to lose your fucking brain. Capital preservation as well. So 1, 2, 3, 4. I have 4 trades, all losers. I didn't stop. I kept going because why? I'm trading with emotion, and I want to make it all back. I want to prove to myself that, I'm profitable every single day. Every single day I can make money with like just trading the way that I trade, but no, it's not the way it goes. This is the harsh reality. I'm still, learning, improving, but look at this. I'm trading with 5 contracts and I lose $50. That's 10 cents. There's no breathing room. Not only is there no breathing room, but I'm literally on the wrong fucking side of the fucking trade. I'm catching a falling knife. Bad. Now, this next trade right here. Man, oh man, this next trade. I am in 10 contracts short. 10 contracts short. Now, how did I do this? I deposited funds. I deposited $500 to trade an over-leveraged setup that was a real setup. So simply what this was we tapped into a 2-minute right here. This was a 2-minute gap. We tapped into that, and simply I saw a rejection, and I bought it with 10 contracts. I bought it with 10 fucking contracts. The discipline, not there. The patience, I mean, sort of, kind of. I mean, not really. No, it wasn't there. Discipline, patience, risk management, no, wasn't there whatsoever. I won on the trade, but I broke a rule of mine, which is depositing funds after a series of blowing through funds on a red day. Just not sustainable, not long term. I hate when I do that, because it's kind of like post-nut clarity, if that makes sense. It's like, fuck, why did I do this? Like, I shouldn't have done that. Like, but with depositing funds. Now, the next day, Wednesday, this was a good day, actually. I'm very proud of myself with this day, because I noticed this setup pre-market, this triangle pattern right here. I noticed this setup right here, but the reason why this failed, because there's no overlapping fair value gap. We're not tapping into any fair value gaps whatsoever, and we can have the setup, but if I have no entry model, then there's no reason for me to really take this trade. Now, let's see. With the next trade, this is where I'm just like, okay, I have something. I have a proven edge. I can see why I'm losing, and I can see why I'm winning. So I go in with 4 contracts. Let me see if I can reset this. I go in with 4 contracts. Scroll all the way back. Damn, bruh. Okay, I go in with 4 contracts right here. So the reason why I even entered on this trade was because, one, I noticed that the bearish setup that we have wasn't even a real bearish, or it was a real bearish setup, but I had no entry model. Now with this next trade, it was a bullish like triangle pattern tapping into a fair value gap. Now this is where my entry model comes into play. So I go in with 2 contracts, and then I noticed that we're holding it. We're holding this fair value gap. It's considered support. Right? So here's the setup. This is an A+ setup in my eyes because of the fair value gap entry. I go in with 4 contracts. I actually go in with 2 contracts and scaling to buy 2 more. So here are the executions right here. So I buy 2 right here for 170, and then I buy another 2 for 188. And I ended up scaling out 3 and letting 1 run. And this was a beautiful trade. Very, very proud of myself for this trade, because I didn't rush to go back in. I didn't rush to take another trade. I didn't be like, oh fuck, I lost. Fuck, I need to make it back now. No, I simply just waited. I reacted, I stayed calm, I accepted my loss, and I simply just moved on. That's literally what I did. And the growth in that, it's beautiful. I fucking love it. I fucking love that. Now, Thursday. This is where I still trade with emotions. Fuck. God damn it. Yeah, I know, right? As much as I say don't trade with emotions, I'm still struggling with it. But I can see my flaws. It's clear reality that, I still trade with emotion time to time. I try my hardest not to, and the reason why I simply do that is simply just because I'm sizing up way too early, and the first trade is sized up. So basically, the first trade I'm taking is sized up way too much, and I need to drop my size a lot more, because it's a big spiral, big spiral effect. Now, my gosh, yeah, this hurts me because this right here. I think of Wednesday's trading day where it's like, okay, it's a setup, but we don't have a fair value gap. This right here, we have a fair value gap, but our take profit levels were extremely short. Our risk to reward was not the best, and I shouldn't have even taken this trade because of the risk to reward. I think it was like a 1 to like 1.3, which is really shit. It's really shit. Now, another thing is I go back in again. So the first trade, I'm like, okay, yeah, whatever. Yeah, I shouldn't have even took this trade, blah, blah, blah. But I go back in again, marrying my bias. I married my bias, I think, like 3 times this entire week, which caused me to blow through so much funds. Because look, with the setup right here, I can clearly see that we inverse this fair value gap, but I decided to go long on it once again. I rushed into it. Like on Wednesday where I didn't rush into it and I was like, okay, let me observe this. This is holding as support. Let me actually stay calm, be patient. No, I rushed it. I married my bias. I saw that we were literally tapping into a bullish fair value gap and I wanted to buy it. But if I had just waited, observed, and stayed calm and actually anticipated what price is really trying to do, then I clearly could have prevented going long and going short because we inversed that fair value gap. And then I ended up marrying and chasing because this right here, I ended up getting stopped out on a retrace into another potential setup. Not setup, but another potential entry. And it ended up running in my favor once again. And this is why you don't trade with fucking emotions, bruh. If I can just find this. Let's see. Yeah, right here. Yeah, you see, it literally ended up running in my favor and going much lower than I actually anticipated. What a shame. What a shame. Now, it's literally the same thing right here. Same thing. I chase price, ends up going higher. I'm just like, okay, we're dumping. Let me wait for a small retrace. Boom, I'm shorting it. No, I didn't wait for proper entries. I'm not waiting for proper fair value gap entries. I'm not checking other time frames to see if we have higher probability fair value gaps versus only trading a low 1-minute fair value gap retrace. Did I rate this trade? I did not rate this trade. And then I take one more, and yeah, this was actually the trade where I'm up in profit. So I'm up $104, and this actually ran in my favor, but diamond hands didn't have them. I had shitty patience, and my emotional control on this was not even there because this is an 8% loss, right? It's an 8% loss, and the trade is still valid. Don't get me wrong, the trade is still valid. We're holding this 1 minute right here as support, resistance. We're literally holding it as a resistance level. So as long as price doesn't break above that, then I'm closing my trade. But I sized up, which is a rookie mistake. Because not only did I size up on this retrace, but it fucked me up on my premium. So yeah. Now with Friday. Today, April 4th. So this right here, same thing. I'm not waiting for a proper entry model. Like my trade, my bias, it's all right. It's all correct, but I'm not timing it. I'm not timing the market. You can clearly see that I get stopped out. And the gray box above us is a 1 hour fair value gap. And if you simply just look into the other time frames, there's other entry models. And this one was it's unfortunate. Not only did I not wait for a proper entry model, but I'm in there with 5 contracts and I ended up holding it for a 37% loss. That's a big fucking loss. $90 on 5 contracts. That's what? That's 18 cents. 18 cents. 18 cents. It's just 18 cents. Now with this trade, this is where I consider is like diamond hands. Like trust your system, trust your analysis, trust your trade. Because like Thursdays where that fair value gap was holding as was it rejection, demand, not demand, resistance. It was literally holding as a resistance zone, and I was the same thing with here because we have a 5-minute fair value gap that we're tapping into, and I enter on this 1 minute right here, this 1 minute gap. I enter in on that. We come down just for like a slight bit, then we come right back up, tapping into this 5 minute. I'm already down like a big amount of like profits. Like I'm floating in, I think in like $100, $100 negative in like unrealized profits, but I don't close it. And the reason why I don't close it is simply because that 5 minute fair value gap, that is a high probability fair value gap for us to simply retrace and go much, much lower. I go in and look at the other time frames, and I trust my system. Not only do I trust my system, but this is a higher probability simply because we're literally holding a 5 minute, and with me, 5 minutes are my biggest statistical edge in these markets. So I add in 2 more contracts, and then I scale out. I scale out 5, and then I let 2 run for only like a minute or so. But this was beautiful because look at this. Lowest point it went to from 50 cents to 35 with 7 contracts, 15 cents. 15 times 7, so do the math. Just do the math. That's like $105. And then yeah, the highest trade it went to 89, average exit 79. Yeah, this was beautiful. Beautiful day. I mean, I am down $148, but simply with my strategy, with my edge, and with my ability to, just acknowledge my losses, just learn, grow, and improve every single day, even throughout the weekend, just back test and just learn, refine my risk. I can take my trading account to simply greatness. I can take any account to greatness because I have a proven edge. I follow my rules. I'm disciplined. I'm patient. I'm waiting for consistent A+ setups, and I'm only taking setups that will pay me. So this was my weekly recap. Hope you guys enjoy. I'll catch you guys.